Welcome. I think Bev is there you are, Beverly, and Guy and Martha. Welcome, and you want to welcome Gary Glenn. He's our speaker tonight. And of course, my staff is here. Peter Stanley's here, and Jessica and Marcy from the Economic Vitality Committee are both here. There's Jessica. This is our last session for the summer, and then we'll be starting up again in the fall, and we're doing a lot of talking about what direction we're going to go with that. But tonight we have Gary Glenn with us. Gary is a former board president of the Alliance, and also, gosh, I think he's been treasurer, design committee chair, economic vitality chair. He's been very involved with the Alliance. And he's also a downtown property owner, both residential and business. So he has a lot of expertise coming to talk to you about how we might be able to get out of this situation that COVID has put us in as businesses. So Gary, without any further ado, I'm going to turn it over to you.
Okay. Well, one thing is I really debated what I should even call this, survive the COVID-19 recession. I don't know if that's the right thing to call this or not. But,
sounds good.
And I would not pretend to be an expert at this. I'm just going to share my observations from working through this and some of the things that I think will help you get through this. Just a little bit about my background, and that's not so important. I think it's experience that contributes the most, but I did study business at the University of Washington. I managed to work in the corporate world for about 16 years before I got smart and did other things. And so I've worked in consulting, I've done teaching, and I've managed my own businesses, and I mean a series of them. I managed my own manufacturing business for almost 20 years. I've done a lot of real property rentals. I'm an owner of 2 bowling centers, a restaurant, and a marina. As Mary mentioned, I've been involved with the Alliance in downtown, and I live downtown in Millville. You know, some of the goals I have for this session is really to understand the implications of this current economic market. And I don't mean to be a doomsayer, but I think this is a really difficult situation, something that if you do a good job of planning and understanding your business, you're more likely to be smarter than the average bear and get out the other side. And some of the things I'm going to try to talk about and emphasize is one of them, you need to consider how to reduce your break-even point. And I'll explain what that's all about and use an example. But I think it's likely you're going to see reduced sales, not just now, but going forward. And so being able to reduce your break-even point is extremely important. How can you control both your fixed and your variable costs? I think projecting cash flow and anticipating needs is extremely important. We don't know what's going to happen, but having some idea allows you to plan. If you decide to go to your bank and ask for help, if you don't have a good plan, you're not going to get a very long discussion. And so you need to understand how this works. And finally, I think it's really important if you use this as an opportunity to improve your brand and your service. And if you don't do that, you're not going to fare well compared to other people. Now, talking about some of the impacts, one of them is we've already gone through over 3 months of staying at home and being closed. Obviously, anybody that's running a business knows what impact that has on sales. I mentioned that I'm an owner of 2 bowling centers in Tacoma. We've lost a third of our year's sales in what's gone on already. I mean, we have 80 employees between these 2 bowling centers. And so that's a known fact. We've already lost that, and it creates a lot of weakness. And so that's one of the effects. But I think the impact is going to be longer term. Most recessions last for 3 or 4 quarters, meaning like 9 to 12 months. And so this is not likely to be the end of this. I looked at all the recessions that we've had over the last few decades, and the longest was 5 quarters and the shortest was 3. So this is not going to get over quickly, or not likely to get over quickly. It's easy to underestimate the severity. I'll explain a little bit about what happened in my manufacturing business in the recession of '91. But one of the things that I did is I waited too long to deal with it, and it was painful. Another thing that I think you're likely to see going forward, even after you're fully open, is the reluctance of customers to come back. We own a restaurant in Tacoma called the Ale House, which is in University Place, and we've been operating for 4 weeks now. But we have 40% fewer customers coming into the Ale House. They're spending about 30 to 35% more per customer, which makes up for part of that. But the likelihood is we're going to see fewer customers for a long time. There are people that are just plain reluctant to come into at a restaurant, whether it's the Tides or the Ale House or whatever it is. And so you have to be prepared to deal with potentially lower volume going forward. Another thing that I think is particularly important in terms of an impact is just dealing with the uncertainty. The graph that I have here is what the county and the governor is using to decide how we change phases. And so their rule is that the number of new cases on a 14-day moving average should be 25 or less new cases per 100,000 population. And so you'll see a blue line across the graph. That's what the level is. The dark blue line is the moving average. That's where we've been. So we peaked out here in late March and early April, and we were making very significant improvement. And so around when we got down to here, about June 5th is where they opened phase 2. And everybody's saying, great, the bowling centers can't open till phase 3. And so what's happened since then? We've seen the incidents go up. And so there's a tremendous amount of uncertainty now. Will you drop back to phase 2? When will you get into phase 3? We ask people to complete a survey to get a little bit more, or try to learn a little bit more about what people are dealing with. And this is where the dark blue line is the number of new cases per 100,000 population in Pierce County. And the state goal to move from phase 2 to 3, or even to phase 2, is 25, which is where my cursor is. And so you can see we got very high on this moving average, up to about 70 around the end of March, and we've been gradually dropping down. And when we got to June 5th, we actually went into phase 2. That allowed restaurants to open at limited capacity and certain other things to happen. And so what the governor's rule is, in 21 days, you're eligible to go to phase 3. What's happened to Pierce County is we've gone up in incidence. So we're over 40 new cases per day per 100,000 population on a 14-day moving average. I know the county is talking about potential of going into a 2.5 or recommending they be improved. But what that means for all of us in business is a lot of uncertainty. It could mean that on restaurants, they'd say, we're going to ask them to close for 2 weeks. It could say they're going to ask them to limit other things. They've already said we're going to have a mask requirement in any public place. But it creates a lot of uncertainty about what's going to happen. And whether you're the Ale House or the Tides, this is extremely important. When you're open, you have a chance to recover. I was starting to mention that we had asked people to fill out a survey. I don't think we got any responses, and that's not a total surprise to me. But downtown business is typified by smaller business. We used to keep track of the number of businesses that were downtown, retail and otherwise, and there were over 200 businesses, a lot of them very small. A lot of them you don't think about because they're not retail. A lot of the businesses downtown are seasonal, meaning they have higher sales during the summer and maybe just approaching Christmas time, and very low sales in the first quarter. I'll give an example of what impact this has on top of the impact of COVID-19. And so I guess part of the question is, how is everybody doing in a crisis? And I don't know that you need to get the survey filled out to know what that means. If you're closed for 3 months, it hurts and it weakens a business. And when you open and aren't getting as many customers as you used to get, it's another problem. And so again, part of what I'm really emphasizing is understanding this, having a plan in advance for this is extremely important. Peter, do you have any idea how Dylan's doing at the Tides in terms of getting customers back?
We have no problem getting customers back, Gary. The problem is that we're so limited by regulation in the number of tables and seats we can have,
Mm-hmm.
that it's great fun to see our customers back. We probably have, a little over a third the seats we used to have,
Yeah.
and it's not sustainable.
Yeah.
That being said, Dylan doesn't share. So that's purely my thought. I think we can, if we don't have to go back to being closed, I think we can hold out. But the uncertainty, like you said, is terrible. And if we have to close again to in-store dining, it's going to be bad.
Yeah. And that's a problem that everybody faces. And so let me talk a little bit about an experience I had in 1991 that was when I learned the difference between kind of economically fatal and really fatal. I mean, it was a difficult situation. This is one of my lessons from the hard way. I had a business called Norcor Plastics at that time, and we built industrial tanks and piping systems. And so the picture you see in the bottom right-hand corner is an example. Those are 4 40,000 gallon high purity DI water tanks that are at an Intel plant. And so we built like one of those tanks about every 2 weeks. They cost $150,000 each. We had about 80 employees. And so in 91, we had a recession that lasted for quite a while. What I saw first is in the first year of the recession, 91, we dropped in sales 27%. The second year, 15%. It took us 4 years to return to the 1990 level of sales. And we sold where people were doing major expansions, whether it was Intel or whether it was a copper mine or whatever it might be. And when the recession hit, a lot of people just stopped spending capital dollars and those projects dried up. One of the problems that I had that was a lesson is I felt I was so good at running this business, I could just plow right through it. And I waited too long. I'm going to say like 3 to 6 months to really react to the impact. I was reluctant to cut staff because we've been growing fast. Our growth was averaging 17% a year before that. And so I didn't want to cut staff or our capability, so I held off. We saw a very significant loss. Over the 2-year period, we lost some $650,000. And that was real money and a real problem. Some of the things that I did, and some of these may apply to other people, is once I figured it out, I developed a pretty specific plan on what I could do. And one of the first things I did is met with my bank and showed them what my plan was. One of the questions they asked me is, what about your salary? And I said, I've already dropped it. I had already taken a lot of actions to show them that I was serious in what I was doing. Another thing I did is I decided to go meet with my top 5 vendors to tell them what the issue was and what kind of help I needed. And one of them was a Swiss supplier. They were a Swiss-German company, quite rigid. They were a major supplier for me. Their US headquarters was in Los Angeles. And so I flew down there and brought it wasn't a PowerPoint, it was an overhead projection at that time, and showed them what was going on. I had a $100,000 line of credit with them. And when I got done, the only thing they said is keep it under $250,000. And what they were saying is they had faith in my plan, they had faith in my company, and they would let my credit line expand to help me solve what was going to be a 6 or 9 month problem getting through this. And so to me, if you have a good plan, you're going to find supporters. Another thing I learned from the recession in 91 is there actually are some long range benefits of going through this. You know, all the times you had resisted changing your pricing because you felt you might cause customer problems, we waded into those things. We spent more time understanding our costs and adjusting our pricings. When we came out of this, our prices made a lot more sense. We put more controls in the business. We built better vendor relations. One of the things I remember well from this is I had a manager over my project management operation. And when I finally started dealing with the recession, I told him, you need to cut staff. And he said, no, you need to go out and get more sales. The next day he was gone. he wasn't willing to deal with working through this problem. And so it forced me to face up to things that maybe I should have faced up to before, but I hadn't. And when we came out of this, we had major sales increase and profitability. And so we actually came out stronger, but it was touch and go to get through it. Now, let me talk a little bit about break-even points. A break-even point is the sales level where you first start making money. So a lot of your costs in a business don't really change when your sales changes, like your rent. If you pay $1,500 a month for rent, if you have 0 sales, it costs you $1,500 a month for rent. And if you have $10,000 a month in sales, it's still the same. That's a fixed cost. Your variable costs are the costs that change in proportion to sales. If you're buying garments that you're selling, obviously, every time you sell a garment, you had to pay for a garment that has to go to that. In a restaurant, you're buying food, and you're buying plates and things like that. A couple of other things that people don't normally regard as variable costs that I think are important. One of them is credit card fees. If you're paying 2.5% of your sales for credit card fees, every sale you make, you have a 2.5% charge. And so that's really a variable cost. It changes. Another thing is your B&O taxes. Your B&O taxes are directly tied to your sales. So as you're categorizing your costs, those are really the variable costs and the fixed costs. And so the break-even point, and I'll give a specific example, is where you get enough sales, you have enough variable margin, meaning where your price is over your variable costs to cover your fixed costs. And I think it's particularly important because if your sales decrease, what can you do to drive that break-even point down so you can handle that? If you expect your sales might be 20% or 30% lower than what they were for 6 months or a year, you need to figure out how to make a profit at that level. Now, let me use an example to try to explain this. So this is not exactly, but it actually is based on a business that used to operate in downtown Gig Harbor. It was a retail business. And so they had about $175,000 a year in sales. And so their variable costs were their cost of goods sold, the items that they sold that they had to purchase, their credit card fees, and their B&O tax. So in this example, I'm showing that those costs added up to $94,500 a year, or 54% of their total gross sales in a normal year. And so their margin, the amount that exceeds the variable cost, was $80,500, or 46%. When you're calculating a break-even point, that 46% is what's called the variable margin. And that's the important thing to know what your break-even point is. And then you get to what are mostly fixed costs. For some businesses, part or all of their labor costs are variable. In this business, the staffing was such that you opened the door, you kind of had to have that staff. So we've got $33,000 of labor costs. We have advertising, insurance, professional fees, rent, etc. Those total $63,000 per year. And so if you have 0 sales, anybody guess how much money you lose? Anybody want to take a stab?
You have 0 sales.
You have 0 sales. How much money do you lose?
63,000.
63,000. So if you have 0 sales, all your fixed costs you still have to pay.
Mm-hmm.
And so that's the fixed amount. And then you got a variable contribution.
Mm-hmm.
There are other things that people use in here that, a bank loan and interest, I've kind of separated that. Although when I look at a break-even point, I would put that back in. And part of the reason I did that, you see where I've called it EBITDA profit. That's earnings before interest, depreciation, taxes, and amortization. The only reason I did that, this is what's normally used for valuing a business. If you were selling your business, nobody cares how you financed it. They only care what it's going to generate in cash flow. And so businesses normally sell for 3 to 5 times that number. They don't care how you financed it. If you don't pay yourself, whoever's buying a business will put that back in. But there are other costs though. Depreciation is another thing that is a cost when you're looking at taxes. You take out depreciation, you take out your loan ownership. There are a lot of owners that don't charge for their labor. If somebody else is looking at that, they're going to analyze that. But the main thing we're looking at is profit for purpose of a break-even point. Now let's look at the break-even point on this business. And so we said we have fixed costs of $64,500. What I did is I added the interest into that. And so it was $63,000 and I added the interest on there. And so if you're not open at all, you still have to pay your interest costs. And so that's $177 a day or $64,500. The graph I'm going to use is on a daily basis. And so in calculating the break-even point, you divide your fixed costs by your variable margin. And so what it says is you have to sell $140,000 a year to break even, and that's $384 a day. Once you get to that, all the variable contribution is a profit. And so if you look at this graph over here, you have a certain amount of fixed costs. There's $384 a day. And so that's the blue line that goes across there. And so your sales start at zero and keep going up, and your profits are the difference between the green line and the blue line. It's not important really, except that you should know what your break-even point is. And if you're what you can do if you have to reduce that. If you want to reduce your break-even point, one thing you can do is increase your margin. If you pay less for your credit card fees, if you pay less for the goods you buy, or if you increase your price, all of that is going to increase your margin. And so if you're underpricing things, nibbling that price up to make sense is a smart thing to do to give yourself a larger margin. When you look at your fixed costs, there are things you can do. If you're hiring somebody to do outside cleaning, I would suggest getting a broom and doing it yourself. You may not need some of the professional services that you're paying for. So even in the costs that are mostly fixed, there are things that you can look at and nibble away at that will reduce your break-even point to a lower level. Rent adjustment, I guess I can say this because I'm also a landlord in downtown Gig Harbor. I probably shouldn't say it. But, you know, if you're really in trouble, but you have a good plan and your landlord sees that you can survive, they may be able to help you. They may say, I can defer some of your rent to the back of your lease or change something and can generate cash flow. You might talk to your bank too. They may say, if you have a good plan and there's good security behind your loan, we may reduce your principal payment for a while if you can pay the interest or take some other action that can help you create cash flow that can allow you to get through this difficult time. Now let's look at some other things and then what the element of time introduces into this. One thing is your inventory level to look at. The business example that I gave had $50,000 of inventory. And there's a term that they use, how rapidly your inventory turns over. Well, $50,000 inventory in that business is 1.7 times a year. It really should turn over 3 to 4 times a year. And so one way to generate some cash to get through a difficult time, like a recession, is to sell some of your inventory. If you've got 50,000 of inventory, sell it down to 40,000 or 35,000. Sell it at a lower margin, but that's going to generate cash because you've already paid for your inventory. You know, I mentioned that I dealt with a vendor who created a credit line that allowed me to increase my accounts payable for a period of time. They weren't going to do that forever, but that increase generated cash to allow me to get through this difficult time. I mentioned you might talk to your bank. They might consider the same thing. I don't know, has anybody done either PPP or EIDL loans?
I'm waiting for response on a PPP loan.
Okay.
Yeah, Dylan's got them, Gary.
Yeah. So, you know, we've done for the 2 bowling centers and for the restaurant, we've done PPP loans. And the PPP loans basically will loan you 2.5 times your payroll. And that's your payroll, including non-federal taxes. And so that's a way, and the loan, they've changed the rules on it. So now it's a 1% interest payable over 5 years. And so it's a long-term loan with a very low interest rate. And if you recreate jobs rapidly enough, they may forgive as much as the total principal or part of it. And so that's a way to get help. Now there's a deadline at the end of the month. They may change the deadline for applying for a PPP loan. And they also have something called an EIDL, which is a disaster loan. These are both SBA loans. And it's fairly easy to get a $10,000 EIDL loan. I haven't gone through that process. And here again, there's a potential to forgive that loan. However, the EIDL loan may be subtracted from what they forgive in a PPP loan. But there are government programs that are helping. The government has passed trillions of dollars of things to help business. And these can be the difference between getting through this and not getting through this. And looking at, I mean, I'm running cash flow for the restaurant and the bowling centers going forward quite a while. And the PPP loans definitely help, but they are not going to take away all the pain. You know, in the bowling centers, they might cover a third of our losses. And so they're really going to help. It's a big number, but it's something worth considering, a loan that would help you get through that. Another thing that's really important to consider is seasonality. Most of us are in downtown Gig Harbor where seasonality is particularly important. We're in the time now where a lot of businesses are profitable and they're not profitable much of the year. And so, you know, you need to anticipate that when you look at your cash flow, and also the impact of the decrease in sales levels because of COVID-19. Now let's go back to our retailer example. This has got way too many numbers, but the left side of this says sales expenses by month under normal conditions. So we're showing this business with 175,000 in sales in the first column. And you can see the peak sales month, in this case is July and August, they're fairly similar. And the lowest months are January and February. And this is fairly typical of a lot of the seasonal businesses in Gig Harbor. And you can look at it, and here's the variable cost. So again, what we saw before is what their variable costs were, which was 54% of sales. So that's their cost by month. And so there's a margin. Now their fixed costs, you can see, stay level all throughout the year. They stay at 5,375 per month. So even under normal situation, they're losing money in January, February. They're losing $1,350 a month. Then they lose a smaller amount in March. And then you can see where most of their money, they're making $4,700 in July and $4,000 in August, drop back to a small loss in August. And then they pick up a little bit of the Christmas sales and then show some gains in November and December. And so for a seasonal retail business, this is normally what you'll see. Shows 16,000 in cash flow. So let's kind of look at the right side, what happens if you superimpose the shutdown and then reduce sales under COVID-19. And so what I'm showing here is they shut down in mid-March. I think it was March 17th or something like that the governor said you couldn't be open. And so I'm taking away half the sales in March, all the sales in April and May. And in this case, I'm taking away half the sales in June. And so what we're seeing is we have no sales, no variable cost, but we still have our fixed costs. So when we look at April and May, you can see the losses that are being generated. You know, we still lost the same amount of money the first 2 months where COVID wasn't impacting us, but then we see even higher losses of $5,375 a month in May. When we start opening, we're still seeing a loss. We're seeing a gain, but a lesser gain. Now, what I'm assuming for sales, if you look in August, our normal sales were 20,417. What I'm showing is 16,333. What I'm assuming is sales the first month you're open are going to be 30% less. And this is not too different from what we're seeing at the Ale House. And so I don't know what people are seeing downtown, but you're likely to see less. Peter mentioned that at the Tides, Dillon has less seating capacity, so you don't have the potential to get quite as many sales. Some people are going to see people that are reluctant to come. So what's happening in terms of profitability if we look at year to date under the COVID example? And so I said, let's assume we start out with a month's worth of cash, which is $13,000. Then we would drop down to about 10,000 normally in March and have a nice cushion even as we went throughout the summer. If you look at the COVID example, we run out of cash by May. And so we get to where we're $5,000 in the hole. So where are you going to come up with the $5,000? If you didn't have the 10,000 to start with, it's going to be worse. And so I think the important thing here is you've got to look at what's going to happen over time. You may get open and you still have some cash, but you may get lower sales and see it's an accumulating problem. And so you need to plan for what might come. The other thing that a lot of people fear is, what if we get an even greater relapse in the fall? May or may not occur. We don't know. And so you need to kind of plan for this and get prepared. And I think have a plan and be willing to ask for help. So just to summarize some of the things and mention a few other things, I've mentioned a lot of dire things, but I think one of the important things is to rely on personal relationships. A lot of you have excellent relationships with your customers and with your vendors, and I think those are really going to pay off. I went to the ale house the first day that we opened and spent some time that night, and we just had ecstatic people that were so glad to get back and see their old friends and see the old place where they used to hang out. It was almost a problem to control their exuberance. They'd been locked up too long. But I think you can build on that. You can build on those personal relationships. If you're adjusting your pricing, if you have to change your hours a little bit, those people are going to understand. They're going to work with you. They're going to help you survive. And the vendors that are, if you're important to some of your vendors, they're going to work with you too. I think you should emphasize service and customer assistance. During the shutdown, we've seen a lot more online business. And so people have gotten more used to doing takeout and online business. But if you're emphasizing the service that you can provide that goes beyond what online customers come and the kind of assistance you can provide for your customers, that's going to make a big difference. I think having a pleasant and safe customer environment is essential. Everybody reacts differently to this shutdown and this virus. My sister went for 2 months with never leaving the house. She was just afraid to go out. And a lot of people are that way, and they're going to come back slowly. Some people will try it, but if they don't feel safe, they're not coming back. They want to feel safe. And so emphasize those things. Emphasize your quality. So kind of in summary, don't underestimate the impact of the problem. I think this is a serious issue. Make sure you understand your costs and your financial position. I think it's important to do the math. I dealt with a business that somebody was trying to sell in downtown Gig Harbor one time. And I looked at their business and I said, well, at your margin, you should be accomplishing this in terms of your profitability. And their response was, what's margin? They really didn't know. And so you need to understand how your business works, what your fixed costs, what your variable costs are, and what your margin is for sale. Make the tough decisions. There may be cases where you've kept your price too low on an item. Make some modest adjustment. Other places you couldn't do that. Control costs where you can do that. And don't wait. Start doing these things right away, not before the problem gets worse. Have a logical plan about what you think is going to happen. I've been developing cash flow plans for the bowling centers and the restaurant for 3 or 4 months. And so I would make an assumption about when we would open up again. I've had to change it several times, but at least I had a plan. It makes it easier to change it. I've made assumptions about, how many of the customers will come back. As you get data, you modify it. But if you have a plan, it's easier to make modifications to the plan. If you go to your bank or your vendors, they're going to want to see that you have an idea about how you're going to do it. Ask for help. You can get help. There's all kinds of people who will help you through this. And so I guess what I'm suggesting, if you do these things, you'll be better than the average bear and you'll probably get through that. This is, when I set up this presentation, I said, this is incredibly boring. But what questions or suggestions, share some things that you see or what's going on. I'd be glad to discuss any of these things.
Gary, I just wanted to say thanks for all the thought you put into this and the presentation. It's from my point of view, it should be common sense for all businesses to understand these terms that you've been putting out. And doing the math is really critical.
So anybody seeing, is the bookstore open?
Oh, yes.
Are you seeing customers like you normally would? A lot fewer? What are you seeing?
Well, it's interesting because, in fact, we opened what, maybe June 8th, 11th, 10th,
Yeah.
something like that.
Yeah.
In that first week, there were very few people. Of course, there were very few people in downtown anyway.
Mhm.
But as it's gone on, it's increasing. I think I agree with you about the safety factor. People really want, I was worried that, well, people wouldn't be safe. They, wouldn't wear masks, wouldn't use the sanitizing stuff and whatnot. But it's turned out to be just the opposite. That it's sort of a reassurance when they walk in the door that if they're going to browse in a bookstore and pick up a book, that they know that it's been sanitized. And they know that if they don't want it, they can put it in a recycle bin and I'll get to it later in the day and I'll sanitize it and put it back. So it's those kind of behaviors that really seem to be working for them. The end result is I am just a couple $100 less for June than I was last year in
Good.
terms of gross sales.
Hey,
So
Nice.
I don't know. It's really surprised me. But
Gary,
it's
Gary,
what's
if
that?
you quit
Yeah.
sharing your screen, we can actually see people.
Oh, I can do that. Or either that or you can take it away from me, but I'll take it down.
I actually can, but I didn't want to be rude.
No, that's not rude.
But I think a lot of the things, my store is much smaller than even the scale you're talking about there.
Still seeing somebody's screen here.
Oops.
There we go. That's better. Hey, Linda.
There's my in-house expert that I couldn't find when I needed her.
Hi, Linda.
Hi.
Yeah, I agree on the customer's desire to feel safe. And part of that is this driving Dylan's insistence at the Tides that you have to have a mask to come in. And you have to wear your mask if you're going to get up and go to the bathroom and pass people. Years ago, I took the Tides non-smoking 2 years before it was mandatory. And I was very concerned about it. But what I found is that our business went up because people want to come where there wasn't smoking. I'm hoping that people will have that same sort of feeling, knowing that the Tides they're doing everything they can to make sure we're following the rules and being as safe as possible. And they'll come to the Tides because they know it's mandated rather than go to another place where it's just advisory or something.
Mhm.
So that's our hope on that.
So Jessica, I know you couldn't talk about any given customers, but are you getting a feel for what's going on from the bank standpoint?
It's mixed. I know that a lot of places, if they could be at full capacity, I don't think that their numbers would be down as much as people were thinking, and people want to get out of the house. But just, I'm with Peter's that clients coming in, business owners, they're giving the same review that everyone wants to be safe, and they are bummed about the social distancing because it's kind of awkward, right? But they are really excited when businesses are enforcing it. When you walk in the door, feedback that I'm getting is they love when they walk in the door and they know what to expect. So signs on the front or a team member employee letting people know what to expect when they come in the building. The business seems to have more repetitiveness than others where you don't know if they're making people wear masks, you don't know if it's clean. Even like the bookshop, I like how you said that once someone grabs something, they put it in a bin so you know that it needs to be sanitized. Those special things are what I keep hearing reasons why people are going back out of their house into businesses. It's a weird time. We want to know what to expect, I think, is all.
Anybody else have some observations about what's going on in their business or what they're observing?
We have a lot of businesses that I think they've made a shift in how they're providing service, and if they didn't and they're shut down, it's going to be a real big struggle. They're out of cash. They're hopefully either on unemployment or maybe got a PPP loan. But I think our big ones that are suffering right now are event planners. That's a huge one. That's just, there's no events until phase 4 probably. So, yeah, that's rough. But I think, if people could go online and start doing things like, we have booming business for party in a box type companies, or, people who really took advantage of preparing signs and balloons and things for all the drive-by parades for graduation. That was a huge boom for some of our clients. So yeah, it's tough. And what's really tough is, we don't know when phase 3 and 4 are going to be here. So the future is pretty unpredictable yet.
Yeah.
One
I
example.
agree. That's one of the scariest things is the unpredictability and the uncertainty. And
Yeah.
I'm hoping that the gov keeps the mandatory mask thing in place for the duration, because our biggest concern, Gary, is that being taken back to a position or a place where we have to close in-house dining, go back to phase 1. That would be really, really difficult. And the people that aren't wearing masks could put us into that position. It's so infuriating to see people who don't care.
And I really agree with that. And my advocacy is give us tough restrictions, but let us be open.
Yep.
Because if you're closed, you're not in the game. And
Yeah.
it's just devastating. So, go ahead.
You can't even work around. If you're not open, you can't do anything. You can't work around. You can't.
No.
I look at the bowling alleys and it's just, losing money when they could operate in a relatively safe manner.
I'll give an example of something that once you're operating, and I mentioned at the Ale House that we have fewer customers but higher purchases per customer. But if you combine those, we're still like 20% down. But we're having fewer employees per sales dollar. We're controlling our staffing, our scheduling of staff better than we did last year. And it's about 18% better. And so our margin is actually better, even though our sales are down. And so that's an example of a cost thing you can do. It's easy when things are good to ignore the fact that you've got more people than you need. But if you do a better job of scheduling, you're going to effectively reduce your costs. Same thing, if you overplate. I was out at one of the bowling center restaurants with Linda on Monday or on Sunday, and I ordered a chicken fried steak, pretty obscene. But I've had 3 meals out of one chicken fried steak.
Yeah.
But the point is that we're plating way too much. I mean, it was a good buy for me, the customer, but I'm also an owner. That wasn't a good buy for me as an owner. We don't need to put it. It was an 11-ounce chicken fried steak with a breakfast. That was too heavy. 6 would have been fine. So anything else? Or have we solved all these problems? I see Pam Peterson on there. She knows the answers to all these things.
Well, I think one of the biggest problems that I'm hearing is that people aren't coming to the stores. We were able to work with the city to get the fee waived for the encroachment permits so that they can do some outdoor commerce. And so we're going to be trying to help the businesses that want to participate in that, kind of do a focus on Thursdays when the market is running and promote it that downtown is where to be on Thursdays. There's shopping, there's dining, there's the farmer's market, and there'll be outdoor commerce available because people aren't quite ready to go back into enclosed areas.
Mhm.
I know we ate at the Tides. I had a visitor come from Yakima, of all places. And then we went to lunch at the Tides, but we ate outside. But I tell you, Dylan watches real close, Peter, on if your masks are on or not.
Yeah.
But I think that's been the biggest concern is people aren't coming.
I'd probably agree. We have fewer people coming in, but at least the ones that do are buying something.
Yeah.
So they must really want to, I would say they probably want to be there, but we don't have too many that just come in and kind of browse and leave.
It's more
Like-
purposeful shopping.
Like we used to in the summer, so.
Yeah.
they're pretty cool.
People are shopping outside because all you have to do is look at the farmer's market to see that.
Oh, yeah.
Because we've had very decent traffic. Although the second one was not nearly as much as the first one. 1,200 people coming through the first time. People want to do something, and they were comfortable, at least a good percentage of them were coming to the market to shop.
So, Josh, what kind of numbers did you see in June of last year where you had 1,200 and 900? What did you have last year at that time?
Heidi and Mary would probably know that better, but didn't we average close to about 1,700 or so, Mary?
Yeah, and as the season went on and we had more produce, it went up to about 1,800 to 2,000 a week.
Mm-hmm.
But 1,200, we were all really happy with that for
Yeah,
opening day.
That was surprising.
Yeah.
And they are caring that we're asking people to wear masks now, making them wear masks.
Mhm.
They are caring that we're doing what seems to be a competent job of maintaining the social distancing outside.
And I think, and we're hearing the same from the bookstore, if you get some people coming in, you can build on that. I mean, you can treat those people right and make them feel safe, and hopefully they'll come back and maybe they'll tell some of their friends. And whether it's the farmer's market, a bookstore, or a restaurant, I think that same principle applies. And everybody has to do whatever marketing they can do, whether you're doing Facebook posts or whatever it is, but it's going to be a slow process.
Yeah, I think I'll have to think some more about this outdoor activity. We have a porch attached to the bookstore, and we've always sold books off the porch all year long. But it's always been our clearance location. We put the 50-cent paperbacks out there and this sort of thing, with the idea that people will come in then for the things that are a little pricier. But it might pay to think more outside for the startup here. Just to get more things that people would buy and look at out there. And I'm not sure, you're talking about the encroachment. I still am not seeing it at the moment, just where I would encroach.
Yeah, I don't think you, Mary, correct me if I'm wrong, but I don't think he would have to do that for the porch.
Not if you're going out on your porch.
Right,
No,
exactly.
but how about the parking lot?
Probably so, almost certainly yes on that.
Yeah,
So
okay.
What we're trying to do is get enough businesses that are willing to give this a try for a while on Thursdays. It gives us something to promote. It gives people an activity to come to. They come down to the market. We get 1,000 people down to the market. And if we can communicate effectively to the majority of them that there's outdoor commerce at these locations, we might be able to help spur things a little bit.
Yeah.
That's what we're hoping.
Well, I always go back to ladies' night out, and whatever works for that gets people all through.
Unfortunately, that's pretty tough right now, isn't it?
Yeah,
We're talking a lot about
some
that too.
aspect of that.
And we're all sharing the same frustrations. We're talking about, you're talking about how to keep your business going. We're talking about how do we keep Girls' Night Out going. And you just can't come up with, it's so hard to come up with a solution because we're not at phase 4, but will we be at phase 4? And if we are, there'll still be social distancing. Yeah, there will. How do you social distance 2,000 people shopping in one day?
I will
There's
say
just some-
too,
Go ahead, Pam.
no, I was just going to say the
Oh.
fact that we've been trying to post at least one or two things on Facebook, but having you actually post that and then share that, I think that kind of helps to get at least more and more people know that we're there and that we're open and what's going on. So I think that helps quite a bit too.
It does, and if only we could all do that for everybody. Because the more people share these things, the more people are going to see them.
Mhm.
And I mean, another business could share your post. Another person could share your post. You could share another business's post, and they all start connecting, and it blooms.
I was going to say my daughter-in-law shared them. They live in Bothell.
Perfect.
And that they've donated, a lot of her friends have donated a lot of books to us. And she even had some that they had given her a list, and she came down and picked out books for them to buy and take back. So I was really pleased about that. So sharing does make a big difference.
It does. It just keeps your name out in front of people and it reminds them. Well, we're at the hour. Are there any other questions for Gary? Great information.
Can you send the PowerPoint out when this recording goes out?
Gary, can you send me the final
Oh, yes.
PowerPoint?
Yeah, is that what you're asking, Jessica? Sure. I'll send the PowerPoint to Mary and you can give it to whoever you want. Is that what you're looking for?
Neat. Okay.
Or you want to look at it?
Yes. Well, both. But I think it's great information and it answers a lot of questions people have.
Okay, thank you.
Yeah,
Gary, yeah,
absolutely.
I appreciate it very much, Gary.
Yep.
Yes,
Yes, thank you.
that was excellent.
I'll send it to Mary, so just ask her and she'll send it, or ask me. I'd be glad to answer any question.
Awesome.
Nobody has the good answer. We'll just have ideas. And if we work together, maybe we'll get through this.
Yeah.
That's
We'll
great.
get through it.
Okay.
Gary, it was an excellent presentation. Excellent.
Yeah. Thanks, Gary.
Yeah, thank you very much.
Thank you, Gary.
Okay, good night.
Good night,
Good
everybody.
Bye-bye.
Hey.